Hello, and welcome to Donation Investment. This analysis is for Palantir Technologies on NASDAQ as of 16th of August 2026 with a share price of $174. The full report is on donation.ca. Clean PE of 172.2x is 5.2x, the warranted 33.0x, so gate 3 caps every horizon at hold, but both do not buy legs are withdrawn on evidence that arrived after 16 July. Start with the loss, because the report does. On the 16th of July, we put a hard do not buy on Palantir at $133.76 across all three horizons. The stock is now $174.4, up 30.1% in 4 weeks. On the short horizon, that call was simply wrong, and wrong by a wide margin. Anyone who acted on it missed a 30% move in a month. We are not going to bury that under a paragraph of framework language, and we are not going to describe the upgrade that follows as intellectual hygiene, because it is not. The upgrade has to survive an obvious objection. Did the evidence change, or did we simply reread our own rule more kindly? The dates answer it. One leg required exceptional, proven, durable growth to be absent, and the figures that put it beyond argument, 92.8% revenue growth and net dollar retention of 157%, printed on the 3rd of August, 18 days after that report. The other leg required a live derating catalyst from the macro report's concentration tail. That tail was graded armed with breadth narrowing in July, and by the 12th of August, it read armed but receding as breadth broadened. Both withdrawals are correct on today's evidence. Neither is the act of self-correction we would prefer to claim. Here is the observation that matters more than the upgrade. The stock rose 30% and the multiple barely moved. Clean price to earnings went from 169 times at the last report to 172.2 today, because second quarter earnings grew almost as fast as the price did, so the framework was not wrong about the multiple being extreme. It was wrong about the 4-week direction. The derating risk that produced the original verdict is entirely undiminished. At 5.22 times the warranted multiple of 33, the valuation ceiling gate fires and caps every horizon at hold, with no growth exception available. The risks run in both directions, and the last 4 weeks proved the upside one. Start with the downside. The bear case is $95, minus 45.4%. And its larger leg is an index-level derating of the whole AI cohort rather than Palantir executing badly, which means it can fire while every operating number stays excellent. The stop sits at 150, 13.8% below, and it has to be that wide because the nearest real support is the 152 to 153 cluster. There is also a disclosure worth carrying. The 62% adjusted operating margin the bull case quotes is not the 42.8% margin shareholders actually earn. And then the honest one, a hold capped by valuation, is the same kind of call that missed 30% last month. The mechanism that produced that move, earnings growing into an extreme multiple, is still live. Now weigh the risk against the reward. The bull case is roughly 38% above today. The base case, the most likely, about 12%, and the bear case a fall of about 45%. So you are risking about 45 to make 38. So, our call on Palantir Technologies on NASDAQ, hold on all three horizons. Remember, this is for education, not financial advice. Always do your own research. This analysis is by Donation Investment at donation.ca. The link to the full report is in the notes below. Have a great day.